really nice about starting these policies, having these policies. There's so much that you can do when it comes to tax-free withdrawals. The money that you're growing within these policies, a lot of people don't realize that this is tax-free. The growth that you have within these policies, and when you borrow against those policies, it's not triggering a taxable event. So you're building the compound interest, you're able to borrow money from the policy. Our clients are growing their policy cash value, they're borrowing that money, and in most cases you want to pay that back. Is you're actually getting a tax deduction for the interest on that loan that you're paying back. Let's say that you have a policy, you pull out $500,000 you want to use for real estate. Now, whatever you use that money for is also a taxable event. So not only are you growing this money within your policy tax-free, but you also have that advantage as well.
Hello, Money Multipliers. Welcome back to another episode of the Money Multiplier podcast. I'm your host, Hannah Kessler, and we ask ourselves, do our dollars make sense? So welcome back to another week. Every week, the episode uploads on Tuesday, so you'll see a new episode every single Tuesday. And if you're watching on YouTube, you can kind of see my little getup. All right, look at my cute little hat. We got her at Cracker Barrel. Okay, through and through, I am a Cracker Barrel girl. And it's a week out. Well, almost a week, about 2 weeks out from Halloween. So happy Halloween, everybody. Halloween is one of my favorite holidays of the year. I just love getting all dressed up, love all the festivities. But today's episode, we're going to be diving into one of the most misunderstood yet powerful parts of the infinite banking concept, the overlooked tax benefits. And we've got a special duo on the mic today, our very own money mentor, Stephen Nagy, and he is joined by Brent Carlson from Corporate Capital. And Corporate Capital specializes in business trust, tax strategies, and asset protection. And together, they're going to be unpacking how the infinite banking concept fits into your overall wealth plan from a tax advantage perspective, how to legally minimize taxes, increase liquidity, and keep more of what you earn working for you. If you've ever wondered how the wealthy use IBC to move money efficiently while keeping Uncle Sam out of their pockets, you're going to love this one. So let's jump in, and I want to introduce y'all to Mr. Stephen Nagy and Brent Carlson.
Hey, what's up, everyone? Welcome to another episode of the Money Multiplier podcast. My name is Stephen Nagy. I will be your host here today. Really looking forward to today's episode. We're going to talk about the overlooked tax benefits of the infinite banking concept. Like I said, my name is Stephen Nagy. I've been in this industry for a little over 5 years around infinite banking. I've been in the financial education industry for about 15 years when I left my career as a personal financial advisor, fully licensed with Ameriprise Financial, and learned about the other side of the fence, how to take back control of your money. And now I travel the country, do online webinars and education trainings alongside my business partners, Chris Noggle and Hannah and Brent Kessler, teaching how the infinite banking concept works, teaching different investment strategies like real estate investing, how to control your retirement dollars through self-directing, as well as many other strategies that we teach through the BYOB Money School. And along the way, we've had the opportunity to partner with some really powerful other people that are kind of needed when you start taking back control of your money, solving your money problem, and learning about financial education. And one of those people that you're going to want in your corner, somebody you're going to want to really get to know very, very well, is one of my good friends, Brent Carlson. So I asked Brent to join me today. He is founder and owner of a company called Corporate Capital, based out of Las Vegas, Nevada, and they have some other offices as well. I'll get into that with them. But I asked Brent to join me on today's episode because he is my go-to. Not only personally, he's who I send most of my clients to, and he does an incredible job, not only with tax strategies, making sure my assets are protected, making sure my companies are structured the proper way, but he does a great job educating and making sure things are done the right way for your situation. So today we're going to dive into a little bit about what that looks like. But as the director of agency for the Money Multiplier and the BYOB Money School, I understand the importance of having somebody like Brent in your corner better than anybody. So I'm super excited to introduce all of you to my friend Brent Carlson. So Brent, thanks for taking the time here today and joining us on this episode of the Money Multiplier podcast. How you doing, my friend?
I'm doing great, Stephen. Thanks for having me. And you mentioned a couple names there that I've worked with for a long, long time, like Hannah and Chris. Just really appreciate being invited to speak on this topic. And again, just the partnership that we've created over the years. I appreciate being able to educate your clients on the benefits of infinite banking and what this can do for not only them, but generations to come. And then ultimately making sure that as they're growing their wealth, that they are doing everything they can from a financial standpoint and from a tax benefit. And I'm going to go over that today. Just real quick, a little bit about our company. You mentioned we do help with corporate structuring. We help with some tax planning strategies. You know, we're getting towards the end of the year, so some of you may have borrowed some cash from your policy. You may have questions. Don't look at getting answers to those questions after the first of the year. Look at getting answers to those questions from your accountant or CPA between now and the end of the year. So if there are any tax planning strategies that can be implemented, those are done and done properly.
Yeah,
Stephen,
Brent, and I'll just butt in here and there, but that's
yeah.
one of those things that I really learned. It's not about reacting during tax time like most people do. It's about being proactive and having that plan and strategy in place way before taxes are due and making sure you're set up properly. So things like that, are so very important. But please go on. I don't want to interrupt you.
Well, no. To talk about that, whether you have these insurance policies or you are a business owner that has a lot of success, and I've been working with this group since 2019, and I see we do a lot of the tax returns, so I see that return on investment. I have that motivation to continue to work within this group because the relationships and the life-changing events that have happened the last 5-6 years, because as many of you know, it takes a couple years, to get the policy, in some cases, in a good position to borrow the cash against that. But what's really nice about you guys starting these policies, having these policies, there's so much that you can do when it comes to tax-free withdrawals. The money that you're growing within these policies, a lot of people don't realize that this is tax-free. The growth that you have within these policies, and when you borrow against those policies, it's not triggering a taxable event. So you're building the compound interest, you're able to borrow money from the policy. And what's really nice, Stephen, about this is as our clients are growing their policy cash value, they're borrowing that money. And in most cases, you want to pay that back. So when you're paying that back, what people don't realize is you're actually getting a tax deduction for the interest on that loan that you're paying back. And then on top of that, let's say that you have a policy, you pull out $500,000 you want to use for real estate. Now, whatever you use that money for is also a taxable event. So not only are you growing this money within your policy, tax-free, but you also have that advantage as well, which I think a lot of people overlook.
Hey, sorry to interrupt the episode here, but I want to take a quick break. If what you're hearing today has made you curious about infinite banking, how it works, I want you to go watch my free presentation. In it, I walk you through the same steps that my family took to pay off $984,000 of debt in 39 months, and how we've been able to recycle and recapture every single dollar since then. This isn't theory. This is real. I mean, this is what the wealthy have been using used in over 200 years to keep the money within the family. This is literally where banks, conventional banks, store a boatload of their dollars at. And it's the same process that we've helped thousands of families across the country put into action. So go to themoneymultiplier.com/presentation and see for yourself how you can start taking control of your money today. All right, let's get back into the episode.
Yeah, definitely. And, I've had the opportunity to travel around the country for many, many, many years teaching, different wealth building strategies and techniques. And, I have one of my talks, I talk about the three wealth killers. And, to me, the three wealth killers over the years that I've learned are volatility in the markets. If you have all your money in the stock market, let's say, and the markets, do one of their downturns, but you're at the point in your life where you need to maybe retirement, where you need to live off that. Well, if those markets make a downturn and all of a sudden your wealth and what you expected to be able to draw off drops, that really can affect things. And then when you look at actual versus average returns, when you look at some of the projections some of these advisors give you, where they kind of pick and choose different times throughout the year to base their projections off of to make it look better than it is. But volatility can kill your wealth at the end of the day. And then number two, the second wealth killer that I've always talked about is taxes. When you really look, and I'll challenge everybody to go do this, hop on Google, pull up a financial calculator and project out maybe just do like a 12% annual return for the next 10 years. But then do that same 12% annual return for the next 10 years, but include tax in there. Like, what does it look like if you're taxed on that money each year as well? And it's amazing how much less money, how much less wealth you have when you start factoring in things like taxes. So if we can eliminate those from our lives, then we can really start, getting to where we want to get a lot quicker. And then over the years, I always added this fourth one, which is interest. And that's where, infinite banking comes in, because we stop bleeding out all that interest from our lives. But I just learned, tax is so important. So like you said, Brent, so when it comes to infinite banking, which I do want to focus on here today, number one, when we put the money in the policy, that money's going to go in after taxes are already paid, right? So that's way the money's into that policy. We've gotten the taxes out of the way, so we're kind of forgetting about it. Now, once it's in there, now we have what's called that tax-free growth within the policy. And that's all uninterrupted. That's all compounding year after year after year. And it comes through the company's annual dividend. So that's all tax-free growth within our policy. And then all as that policy grows throughout our lifetime, what else grows with it? And those of you that have been following us know this, the death benefit. So the death benefit also continues to grow with our cash value inside that policy. And that death benefit, when that is paid out to your beneficiaries upon your passing, that death benefit is also tax-free. So it's going to go to your beneficiaries tax-free. So we're getting the money in there, then all that growth, that death benefit down the road, which is more than we ever put into the policy, that's all now tax-free. Now, the power of infinite banking is being able to simultaneously use that money that we're putting in that policy while it's in there compounding tax-free, guaranteed, throughout our lives. We can borrow that money out to use it for other things. Now, when we borrow the money out, it comes out in the form of a loan, so we're not taxed on that either. Now we have that money that we can use. So you're telling me once I have that money, depending on how I use it, as long as I have it set up properly, depending on what I do with that, I can start having tax advantages there as well. Is that what you're saying?
That is correct. There's deductions for that. So not only are you getting this cash value, borrowing the money, and then as you know, Stephen, some people pay that back and some people don't. And obviously that would come off the death benefit at the end. And so that's kind of a personal preference. But yeah, you're able to borrow that money. Like you brought up a very good point with the stock market. People, especially right now, if you have money in the market, you're probably really excited, right? There's going to be a correction. That's just the way the fourth quarter typically is. So you can anticipate that correction. But like you said, you make $1 million, you're going to be paying taxes on that. And unlike this policy where you're growing this compound interest, where you are not paying taxes on it. And then in many life insurance policies will issue dividends, and these can be reinvested back into the policy, and which often leads to like accelerated cash value growth without triggering a tax liability, which is absolutely huge.
Yeah, definitely. Okay, cool. So So I think I got a good grasp with that. Hopefully everybody's following here, and it's pretty straightforward. So let's take it to the next level. So these are personal policies. So this is if I'm owning that policy. Now, if I own a company, and I get this question a lot, okay, Brent? So
Mhm.
follow along with me here. So let's say I own an LLC, which is for tax purposes is what you would call like a pass-through entity. Is that right?
Depending on how it's taxed, if it's a single member, it's pass through partnership, it file a separate return. But for the
Okay,
most
let's
part,
keep it simple. Let's just say it's a single
single
member
member,
LLC.
correct?
I have the LLC set up, and I know you guys can set us up with a much more complicated, a full asset protection package. But let's just say I have an LLC and I own my infinite banking policy in one hand. I have my LLC over here. Now, the money from my policy, I'd like to take a policy loan and use it in my LLC. Now, what is the best way to do that? Because I've heard a couple different ways. I've heard you can take the loan from the policy and then you can loan it to the LLC. What would I do in that case? What are the advantages, Brent, to the number two? Or would it make sense to take a loan from the policy and do a capital contribution to my LLC? Or what would you recommend there if I want to use my personal policy loan with my LLC business? What would you recommend there?
That is a great question because those are the two options that you have when you're putting the money into the entity. It can either be a loan or it can be a capital contribution. Everyone's situation is different, but with my 20 years experience, I'd say about 9 out of 10 will do it as a loan because then you are in a position where you could potentially forgive the loan. Again, there's usually a lot more tax benefits when there's a loan as opposed to a capital contribution, because that capital contribution could make it to where you have to pay a tax that you could have avoided by just doing a loan. So for the most part, we will do it as a loan. And then business owners can use their whole life insurance policies as their overall business and retirement planning. By integrating a policy with like a buy sell agreement or executive compensation plan, they can provide tax free growth as well within, and the policy's death benefit could be used to fund the business succession. So there's some different things that we can do, not only from a tax point of view, but also if they are looking to pull out this money to start a business, then we will make sure that those tie together in that capacity. And again, for the most part, a loan is what I've done and what my clients have typically done. It's very, very, very few and far between have I seen a capital contribution.
Yeah, okay, cool. Okay. And then when we do the loan to the LLC, just using that as an example, we need to create a promissory note, right? That lays out the terms of that loan. Is that the legal document that we would need?
That is correct, and a lot of times, as you know, we formed hundreds of LLCs for your group. A lot of times, when people need the operating agreement or minutes of their meeting or a promissory note, I have a program where I can go on and type up a one-page promissory note fairly quickly, or point the clients in the right direction where they can, get that basically for free, and make sure that they have the proper language. But that is something that we would assist with. And in most cases, as long as you have it and the terms are there, yeah, that promissory note will suffice. And then your accountant or CPA, this is one of the reasons why I would work with them more throughout the year as opposed to when taxes are due. So you could really find out if there's any other tax advantages before the end of the year.
Yeah, absolutely. And I know a lot of people, everyone is always looking for ta ways to reduce their tax liability. One that I know has become kind of popular, but maybe a little controversial is, using your home for events. I believe it's called the Augusta rule, right? Is
Yeah.
that something that you guys recommend, or how do you look at that?
Yeah, so I mean, now we're talking about having these policies. Now we're going to start building up this cash value. Now we're going to start borrowing money. We're going to start doing investments. We're going to start a business, whatever your goals and dreams are. Now, there's a couple things that you can do, again, benefiting you from this policy going into this LLC, where you could potentially pay your kids. And if your kids are under 18, even though the money's coming from the policy to an entity, you could potentially use that money. And this year it's up to like $15,750 that you could pay your child without it being taxable, but it's a write-off for your business. So again, that is not a cookie cutter approach. That is usually a one-on-one type conversation.
Okay.
And then the other thing that you just referenced was the Augusta rule, where through this entity or their business, 14 times a year, they're able to have a meeting at their house or another location. And the national average, Stephen, is $2,000. So our clients for last 6, 7 years, we've been doing the Augusta rule. I've been doing the Augusta rule where I pay myself that over 14 pay periods. And the beautiful thing about it, we're talking about taxes and putting more money in our pocket. That is 100% tax deductible for the business. And that 28 grand, you do not have to report that anywhere on your tax return. So basically it's free money.
Yeah, no, it's amazing. Okay, cool. So we can loan the money to the LLC, potentially pay children, things like that to reduce taxes. We can use a house or another location to reduce through the Augusta rule. You mentioned before the buy-sell agreement, some of the executive bonus plans, things of that nature. Now, those would be more when it's what's called a COLI, right, Brent? A company-owned life insurance policy. So that's where the company would own the policy. So instead of me as the individual owning the policy, my company would actually own that policy, and that's when we can do some of that. Is that correct?
That is correct. And I just wanted to touch on that because there's so many business owners that you guys have within your circle that I wanted to touch on that. And that is a little bit more advanced, but you are correct with that, Stephen.
Okay, yeah, because I get that question a lot, Brent, actually. Should I start a policy in my personal name or in my company name? And at the end of the day, it kind of boils down to how the company's structured because with an LLC, like we just said, it's a single member LLC and it's a pass through. There's not a whole lot of advantage to that LLC owning that policy. Is that right? It'd be better in the personal name. And the reason I've always heard that, you can correct me if I'm wrong, you're the expert at this, because an LLC typically is used more for asset protection purposes and tax purposes, where we don't necessarily want to have an appreciating, growing asset within that LLC. And that's what a whole life insurance policy is. It's a guaranteed appreciating asset that's now, so if the company owns that, you don't necessarily want to have more liability in that LLC. So a lot of times it's better to own it personally and do that loan like we were talking about. Is that right? And then
That is correct. And the only time it may make sense to do something like this is if you have a company, like mine, for example. I like to be an example. Let's say it's a larger organization, multi-million-dollar company, and there's some key players within there that are, making up, let's say, half of that, then there may be some benefit there. But again, just wanted to touch on that for those of you who may have multi-million-dollar businesses that have kicked that around and talked about that before. We can explore those options as well and kind of have that discussion with you from a tax point of view and from a legal standpoint as well.
okay, cool. Yeah, I'm trying to think. So, this is going to be kind of a quicker podcast today because at the end of the day, taxes aren't that exciting. But it's one of those things, and Brent, that you live in this world, but I'm just being honest here. It just doesn't excite me. But I will say, when you have the proper plan and strategy in place and you see at the end of the year how much more money you're keeping because of all of that, and you have these instruments that you're using, like the whole life policy, you're taking loans the proper way, you're moving the money the proper way. I mean, this stuff is so important. So while it's not exciting, I do want to emphasize how important it is. And so this is all things that you guys can help with, right, at Corporate Capital, Brent?
Absolutely. Again, we can help with any structuring. So those of you who maybe have a structure in place and maybe you want to utilize it for a current policy that you have, we can kind of look at that and make sure that you're in compliance, make sure that that corporate veil that you intended to have protect you is indeed being protected. If you have an accountant or CPA and you're listening to this podcast, I would encourage you to reach out to them immediately and get on their calendar and have that conversation at least the fourth quarter. And especially if you have some things going on, if you are paying a high tax bill, have that relationship, make sure that you sit down, whether it's questions about your policy, money that you've borrowed, whether, like Stephen said, you pulled money out of 401k or you did a self-directed, we can help with all that. And you mentioned that earlier, Stephen, as far as the self-directed, I wanted to bring that to this audience attention as well, that we have done that for Chris and his group since 2019, and we help set up the LLC. So if they have money that they want to use from their retirement, roll it over and not have that taxable event, we can do that. So for those of you that are, kind of chomping at the bit to get started, to start doing these investments, but you don't know how to get the money out, you haven't started a policy, that is a very good vehicle. We use often throughout the year for those that don't have the liquid cash available for some of these investments.
Yeah, I love it. And when it comes to infinite banking, just to be kind of clear here, what the way I look at it is I draw a line in the sand. And what I do is I look at one side, which is what I call qualified funds. So these are going to be anything in a 401k, an old 401k, IRAs, whether it's traditional Roth IRAs, HSAs, SEP simples, all these different 403 plans and whatnot. So this is all what we would consider qualified funds. Anything that the IRS says, hey, if you do this with the money and treat it the proper way and apply by the rules of IRAs and 401ks, then the money's either going to be tax deferred or tax-free growth in the example of a Roth, for example. But but I draw that line in the sand because we really don't want to mix the two, and then on the other side of the line is all what we call our non-qualified funds, which is just, our income, our money we have coming in, whatever. It's just money that hasn't gone into a retirement account. And that's really the money we're looking at, the non-qualified money that we want to use for infinite banking. So a lot of if you've been watching this podcast, one of our goals is how much of our income can we run through the policy before deploying it out there into the world for other things like bills and whatnot? How much can we get into policies first? That's how we grow our banking system. But we always want to keep those separate, the qualified funds and the non-qualified. However, there are strategies where, hey, maybe you do want to use that qualified funds, like Brent said, for private lending, for real estate investing, for something, but you don't know how to get it out of that old 401k or your Charles Schwab IRA or the retirement account you have with your financial advisor. And that's where you take those qualified funds and you roll them over, direct transfer to a self-directed custodian. And you can set up what's called a checkbook control LLC account with it. You can do it with your company. There's so many different ways to set these up. And, Brent and their team, we can definitely help with that as well. But one of the things, if you have one of those accounts and you're wondering, if you're younger, sometimes it makes sense. If it's not a lot of money, maybe just cash out of it, pay the penalty today, and take control of that money and put it into something like infinite banking. It just depends on your situation. There's so many different factors that go into it. But one of the things that all of our BYOB money mentors are expert at are talking to you about your situation and showing you options. Okay, here's your situation. Here's one thing we can do with it. Here's another thing we can do with it. And then we couple that strategy and connect you with Brent Carlson and corporate capital. I mean, the sky's the limit on what you're able to do. So my point here is schedule a call with our team. There's going to be a couple links on this video. One, where you can schedule a call with the BYOB money mentors so they can talk to you about your infinite banking strategy, what else you have going on, and making sure we're taking full advantage of all of the wealth and all of the money that you have. And then when we can connect you, there's going to be another link where you can connect directly with Brent Carlson and corporate capital so you can start exploring all the different stuff that we talked about today.
Well, I appreciate that, Stephen. Again, I appreciate this opportunity. One thing I want to make sure the audience knows is the relationship that I've established with you. I appreciate on a professional and friendship level, obviously with Chris and Hannah. So one thing that I have always committed to is whether it's myself or one of our founders, we will be the ones to have the consultation with you to go over these tax-free loans or the tax advantage dividends or the tax-free withdrawal from the policy, anything that has to do with tax, questions regarding that, we can help you with that. And we're very familiar. One thing I want to point out is this relationship has gone on for so many years that we have hundreds of clients that we help with the taxes. We help with the structuring. So we're very, very familiar with the infinite banking, and we're finding a lot of people coming to us from other groups or other CPAs, whether they don't file C corps or they're just not familiar with the infinite banking. There is a lot of value to that. So the team that you have with the Money Multiplier is absolutely phenomenal. They'll help you with the policy. They'll help you kind of put everything in place. And then our job is to make sure you maximize that to your potential for your investments and, more importantly, for your pocket.
Awesome, man. Well, Brent, I really appreciate your time today. I think this was really good, just kind of some of the different possibilities and what we can do when we start really focusing on our money, focusing on all the little wealth killers and things that bleed our money out of our lives.
Yep.
Infinite banking is such a powerful tool. And when you couple that with some of these tax strategies, some of these investment strategies, some of these different real estate strategies that we teach, it's just it's amazing how much quicker you can get and achieve your financial goals in life and set you and your family up for generations to come. And Brent, I appreciate you being part of that puzzle that we're all putting together when it comes to our financial lives. So thank you very much. And I look forward to talking with you again here soon.
All right. Thank you for having me. I appreciate it.
All right, everybody, have a great day. This is Stephen Nagy, Brent Carlson. We're signing off. We'll see you next time on the next episode of the Money Multiplier podcast. Thanks so much for listening. See you guys. Bye.
Thank you.
Wow, what a powerful conversation. Big thanks to Stephen Nagy and Brent Carlson again for breaking it down of how the infinite banking concept and smart tax strategies go hand in hand together. And if you're ready to learn more about how this concept can work for you, make sure you have watched our full Money Multiplier presentation at themoneymultiplier.com/presentation. And if you haven't yet, hit the follow button, leave a review, share your comments down below, and also share loves. Share this episode with a friend who needs to hear this powerful information, because as I always say, if you were my friend and you knew about this, but you kept this information all to yourself, man, I'd be so mad at you. So share the love, share the knowledge. Don't ever hit the arrival syndrome. And until next time, remember, your money works harder when you're the one who's in control. I'll catch all you money multipliers next week. Bye, y'all. Thank you, Money Multipliers, for tuning in to another episode. If you enjoyed this and you want to learn more about the infinite banking concept, click right here. This takes you to my powerful 90-minute presentation explaining in depth how, why, what is the infinite banking concept. I will see you next Tuesday. Catch all you Money Multipliers then.